Hello from Chicago, traders. It's 8:02 a.m. Chicago time on Monday, the 9th of November, 2020. This is episode number 1875. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. What do you know? What do you know? The news today, which has moved the markets approximately 110 points from an already higher market. Uh, Whoa, easy. From an already higher market, it's moved quite a bit already, and we are basically currently in the S&P 157 and a half points, 157 and a half points above Friday settle. The S&P is up 4.5 points. The Russell is at lock limit up, people, of 7% or 115 points, trading at 17.58. Crude oil's up 40.7, $3.58, up almost 10%. And it's just insanity. Gold has taken a $70 hit, down 3.59%. So what this is an allocation not only to risk, clearly, and for good reason, with the news from Pfizer, but also the settling of this or somewhat settling of the election. Remember, the market does not like uncertainty, so any certainty provides with it risk on. It becomes safer to put money on the line. But if you look at the Nasdaq is just not getting with the party. The Nasdaq's moving lower. I had asked the folks in Convergent who may know better why the Nasdaq's lower, and the opinion was that the money is cycling out of techs into small caps as things normalize. And I asked a couple of institutional buddies, and that is exactly right. There's the Nasdaq stocks have less to go up than some of these small caps that have been beaten down, and that's why the Russell is so much higher. There's more money to be made in the small caps in a world that returns to normal. So that's the sentiment today. Risk on pretty strong. Risk on pretty strong with crude leading the pack at $40.80, up 9.91%, followed by the Russell, Euro stocks, the DAX, the Dow, the S&P, and the Nasdaq in that order. Gold being the laggard, the yen, the bonds are down 2 and 8 ticks. The Bund is down 109 ticks, and the 10-year note is down 21.5 big ticks. The U.S. dollar is higher by only 5 cents, despite the big move in gold. The U.S. dollar is only up 0.05%. That's where we stand as of right now. The week is just beginning, and this morning, and I'm just going to go through the top tier figures. The top tier figures. Let's keep the politics out of the chat, please. That's just, if you have an opinion about politics' impact on the market, fine. But if you have an opinion on a politician, I really couldn't care less. And I don't think anybody else does. It just agitates everybody. Everybody's so sensitive. This today, the top tier, the highest impact figures. Balanced trade came out of Germany, came in at 20.8 billion versus 19.9 billion forecast. That's in euros. That's leading to the strong move in the DAX before the COVID news came out at 5:45 a.m. Chicago time. This evening, we get the inflation rate year on year from China at 8:30 Eastern. Expecting inflation of 1%. Tomorrow we have the claimant count out of Great Britain at 2 a.m. We have the zoo economic sentiment. This is a big number for Germany at 5 a.m. Eastern. And then Thursday, we have GDP out of Great Britain, balance of trade out of Great Britain, and we have core inflation and the inflation rate out of the U.S. at 8:30. Friday, we have GDP growth out of the Eurozone, and that wraps up the week pretty much. Let's move right into, just dive right into our review segment. Here's what was expected on Friday. Now, a couple things I want to go over here, and my goal is to just not create a massive long video here. It's tough to do that. The primary scenario on Friday: consolidate, push up, and squeeze higher. I was looking for 35 to 35.40 to be broken, to be busted up to 48, and then to hold sideways into the weekend as some profits are coming off. The secondary is push the overnight high and fall back in and hold steady sideways. Potential test down to 35.01, the 35.01 area. What I did say during this segment, you'll see it in the captions. Where is it? So I talked about the election and how that's going to likely to play out. And then what I did, where are we? What I discussed is the very likelihood that that the market would push to new all-time highs. Yesterday at 35.11, we have a lot of propellant, a lot of fuel to rocket up through into 41, which is the last high. 41 is the most recent swing high, clearing the deck for 76.75. That's 35.76.75, and most likely pushing new highs. This is from Friday's video. Most likely pushing new highs within the next couple of weeks, probably next week as the election results become clear. Looks like Biden's being called. This was on Friday morning at 8 a.m. Chicago time, and we are way beyond that. We are opening a lot higher, so we are completely out of this picture. We're 150 points out of this picture, actually. We're trading way up here at 36.58 in new all-time high territory, which gives us very little to work off of because there's no profile here, right? The market's never traded here, so we don't have any imprint of an auction in this area. We're above all MCs, and we're in new all-time high territory. So that makes it a little tougher to read. Friday, the action was more scenario 2 than scenario 1. We just could never take out the high, which was kind of surprising to me. 35.2250 has some confluence from way back, but from about 5 weeks ago. But I did expect it to be at least attempted. Friday dropped right down into the 78 zone, putting in a low at 76.50, and then consolidated sideways for the rest of the session, giving us a pretty even profile, a normal distribution profile. Coming into today, we have a lot going on here. The volume is really high. It's a little over 3 times the normal volume, and we had already gapped up overnight. So this is the open here. We have a gap up, and that is on the market having less certainty with regards to what is most likely to take place in U.S. policy, in fiscal and monetary going forward. I was commenting yesterday, I don't know to whom, but the market does not care if Trump wins or Biden wins. What the market's pricing in, the potential for returns, and as soon as I saw some articles this morning saying the market is voting for Biden as well. That's just utter crap. The market's simply saying, okay, there's less risk here. The election is being settled, and so we can go ahead and put some money on the table. push some money out and get it to work. And that's where we get this gap and go situation. We went right to the 66 quarter level. This is a level from way back from the same day that we put all-time highs on. Before all-time highs were here in the 76 zone. It hits the 66, pulls back, consolidates pretty well at 35.52, which is another stock zone. And then the Pfizer news kicks in at 52 quarter. 52 quarter is the print, is the last normal print before the market was lifted. And we immediately moved about 100 points off of that. Immediate in a 15-minute time frame, 100 points. We pulled all the way back to another stock zone. This is based on a market measured move. And then it continued to the next stock zone, which is another measured move at 36.66. So this market is way outside its boundaries. What's also important to note here is it's above the 3 Vol Sigma volatility level. The close-to-close volatility currently, the historical volatility, this is how we project what is likely to, where it's likely to close. That number rests at about 48 points from day to day. We expect the market to be plus 48 points from the last close, RTH close, pit close, or minus 48 points from the last close, giving us 96 points of range that it can play in. And look at how high this has moved. This has moved above 3 times that. This is really stretched by that measure. Comparing it to Friday's auction, which is the most recent auction, this is really long in a tooth. Now this is a fundamental change, and it could have a far-reaching impact. It's not a geopolitical change, but it's a big change. But up here, I am going to have a hard time getting long. So this is one of those days where I could save money by not trading. I'm not going to, this is just hard for me to read. What do I have going against me here? I have new all-time highs, so I have no reference to go off of to hold structured trades. I have a market that has stretched the bands that we use to figure out when the market is actually quite wide, right? So we have the historical volatility sigmas. It's passing 3 Vol Sigma, which means that there's a 0.3% probability, actually 0.15% probability that the market would close up here above the 36.49 quarter. Historically, again, past performance is not indicative of future results. And then in addition to that, we have a news-based event. We have a scene of the crime. We have an SOC down here at 52. And so the question is, does the market then balance itself out and start moving back? There's quite a bit occurring, by the way, at the 3600 to 3590 area. There's quite a bit going on here. Does it come all the way back and trade the SOC or what? So for you guys who are looking for structured trades, this is a good day to just observe. Okay, it's a good day to observe. For the guys who are, by guys I mean guys and gals, who scalp, you are able to use current market generated information to define risk, and therefore, again, risk comes first. We have to define that first. If you're not defining risk first, then you're just gambling. We could use the current market generated information to define risk and come up with scalps. That's not an issue. For trading, order flow today is going to be busy because there's a lot of activity already in the market with volumes at 632 instead of 190,000 at this point. And so that's where we stand. At this rate, we may not get a stimulus. We may not need a stimulus. There may be an argument against the stimulus. And so what does it do? Geopolitically, does it come all the way back because the market is with Biden being selected, there's less of a chance of stimulus. Also, Mitch McConnell, who is not the majority leader in the Senate, but is likely to be because there are two races in Georgia that run off to January, and so the Senate does not know. There's no clear sign who the Senate majority leader. Now that the Senate returns, it'll continue on its merry path just the way it was, with Mitch McConnell being the head of it. But after January, who knows? It's a coin toss. We don't know where those seats are going to go. That's how tight these races are, incredibly, incredibly tight. And so there may be a change of heart about the stimulus, and the market may trickle down. There's just a lot in play, is my point here. And so you really need, this is where you kind of play close to the vest, define your areas and wait for the market to respond to those, and then get in and just take your stops. Take your stops and stick to your limits today. Very, very important. There's very little, as you can see in the profile here, anything below 07, which is the line in the sand for me today. Anything below 07 brings us back to that 35.66 area. So once it trickles down here, it is likely to run down the flagpole all the way down to 66. However, scalpers, high frequency traders, that sort of stuff, there's likely to be a lot going on. But for those who are looking for structure, following a trading plan, I don't know what your trading plan is, but I doubt that it has backtest results for this sort of environment, because this has never happened before. Okay, so that's the point. I'm just trying to save you from yourself, and that's the point that I'm looking to make here. So let's see. So here's a CT Bookmap. This has been busy as all heck today. There are a lot of ticks. Look at how long it's taking to process this. Of course, this laptop can't keep up. But here's what we saw. We saw the market kind of resting again from 66 to 50 right here. This is a very prominent, look at that high volume node here, very prominent. It'll likely shift up here shortly after the open. And look at how this ripped up. I mean, very large trades going off, a lot of collisions, and very little in terms of pullbacks. So the order flow up in this area is not very clear. If you look at how the market is sizing up in terms of the heat map, really tough to see things. The red areas have been trading out quite well. Have been pushing through, and it is really truly a scalper's market at the moment, right? This is a long-term investors type of market. So let's take a look at what's expected for today so we can move on. Let's shut this down so we can get some bandwidth here. Things are slow here, folks. Okay, so the current environment has completely blown my scenarios out of the water, as you would imagine, and so it's start from scratch time. What am I expecting for today? This is a big gap up. The expectation, open auction out of range, squeezes the 68, pushes into 70. So I'm looking for 70 up here, even figure. And then I'm looking for a rotation down, a splash down. So that arrow there is supposed to be, let me just redraw that. Squeeze into 70, 70, looking for an impulse down, consolidate, come back into this 31 area, and then looking for it to push back to this 07 and then hold steady up here. I'm expecting the gap zone, huge gap zone, all the way down here to hold. Okay. The secondary And these scenarios are based on classic market auction response. The secondary open auction respond down, come back down into the 31, impulse up, consolidate up at the 70, and then start to squeeze towards the century figure up here. The century figure also has a measured move behind it, and I expect it to just consolidate here and finish below. The work is already done on the buy side. The work is already done for the session, pretty much, as we said, with the push through the 3 Vol Sigma at this point. So that's where we stand. I'll leave you with that. Good luck, and I'll catch you tomorrow. Just mind your risk today. Good day to watch the order book, watch your time and sales, and watch the order flow. Good luck today, and I'll catch you later. Take care.